Hello everyone, Dr. Stock here. Just wanted to come in this morning to address the fact that Tesla dropped down below $200. Now, I did say earlier in my videos that it would likely not sustain its prices in the short term that we saw. And not so long ago, we had Cathie Wood come out from ARK Invest and say that she believes that in 5 years' time that we'll see Tesla's stock price go up to $1,500 per share. That would be incredible, about an 8x your money in just 5 years' time. Now, we don't know if that's going to be correct or not, and she believes that a lot of that is attributable to the full self-driving side of things, to the AI side of things. So we're going to have to watch that play out. Robo-taxis would also play into that as well. I just wanted to give more of a practical take on Tesla, and the nice thing about practical is to kind of pull back a little bit from the dollar signs in your eyes. Now, mind you, I'm not saying it can't happen. What I'm saying is, even at a more practical view, I still believe that Tesla still has what it takes to move up significantly from where it's at right now over the next several years. So I'm going to get into it, but before I do, I just want to let you know down in the description, you'll find the link for my Patreon. Come on over and join me over there. Be part of my community and the Discord that I have and access to the services and products that I provide. Like I said, that link is down in the description. With that said, I'm Dr. Stock, Doctor of Education. Let's get right into it. So I brought up the investor relations investor deck for Tesla, and now mind you, they're going to give shining examples here. However, I think that when you look at it, you get to see some things that are very, very convincing to the fact that they really are a company that's still growing at a very rapid pace, and they're likely to continue for the next at least several years, although still being that we're part of the EV wave and that Tesla is leading in that movement. I think that as we continue to see that a bigger ramp up in electric vehicles, that Tesla has positioned itself to take full advantage of that rapid growth that we see over the next several years as we have a build out in infrastructure, and we have also that taken market share. So what we see in these year-over-year numbers is that automotive revenue is up 33%, which means they're bringing more money in, and then regulatory credits are still a large part of that. And governments, I think, are going to be spending a lot of money on regulatory credits. So while Tesla's going through more of its growth, more of its ramp up, and still building out and increasing vehicle production, we still have the regulatory credits coming in and really boosting their ability to be profitable. So that's something we want to keep an eye on, and those as they build out and as they increase their own margins and become less reliant on regulatory credits and become more of a mature company, that is okay if that starts to taper away after a while. I can imagine that governments will be spending across the world on carbon emission credits, for example, throughout time. So keep an eye on that. Total revenues up 37% year over year, gross profit 19%. And that's one of the big things in this current environment that we find ourselves in, that if it's profitless, it's not really, we had January's run up, which really helped a lot of stocks, and including a lot of growth stocks, even if they're still pre-profit companies. However, Tesla should weather this a whole lot better because they are a profitable company that has proven growth over time. So operating expenses, the fact that they're coming down is a good thing, and income from operations up almost half from the previous year. Operating margin also increasing a little bit. So just looking down through these numbers, and I know it's going to be a long video if I go through all of them, I do want to say that revenues, gross profit margins, those are all up. Automotive gross margin down, not even quite a full % yet. And watching that over time, watching those trends is going to be important for telling the direction of Tesla over time. We have net cash growing over time. We have capital expenditures also growing. So that's money that they put out, but it's not growing as fast as the money they put out is not growing as fast as the money that they bring in. And so that's a good balance. There's always going to be capital expenditures. So there's always going to be times when the money has to be spent in order to make the money. What you want is that we'll just put it in dollar amounts. So let's say that you spend $10 in order to get $12. Well, that's 20% extra that you brought in than what you spent. So as long as you're bringing more money in than the money that you're spending to get that money, and the businesses always have to spend money to get money, we just want to make sure over time, especially the companies that we're investing in, the amount that they spend to make that money is less than the money that they bring in from it. So we don't want that to be upside down like so many other EV manufacturers throughout the world. This is the last slide that I'll show you from the investor deck, just because it it talks about production numbers. So the production is growing over time, 50%, almost 60% year over year for models S and X, and then models 3 and Y up over 40%. And so total production coming out at about 44% year over year. And it's expected for 2023 to bring in another 40%. Now, we are talking about economic slowdown through hearing from a lot of different companies. I've said it on this channel. The nice thing about Tesla when it comes to economic slowdown is that they can afford, and I know that's a funny word to use, but they can afford to lower the cost of their vehicles and still make money on those vehicles because they have such a large amount of profit relative to the other automotive makers that are already losing money on their EVs, whereas Tesla's pure EV and making money and doing so at an incredible rate. Tesla can afford to cut those costs and really get a price war going in EVs if they need to. And also if they run into any sort of demand issue by lowering the prices, they can also help to improve demand. So Tesla has a lot of strength. They got a lot of build out. They also on this slide talk about solar deployed store and service locations, and then also supercharging locations are also building out. So we have infrastructural build out, which should make it more convenient over time to own an EV, especially because this is Tesla specific. Seeing Tesla infrastructure is also part of that overall infrastructure for the EV market. So Tesla, in terms of growth, we have the world at the EV's back, and the leader in EV is Tesla. So if you're investing in companies, you want to invest in the leaders in the space that have large economic moat where they're hard to take over through competition. Like looking at Apple as a shining example, they have brand recognition, they have pricing power, you name it. For Apple, there's a reason why their market cap is as high as it is and why the stock has been so successful as it has been. I am an Apple user myself. I have 3 different devices sitting on my desk right now, all from Apple. And I'll tell you, the integration that they have is just incredible. So Tesla is a very good parallel in my mind, that they have such a huge vertical where it allows them to be a streamlined, profitable company. And they're also still younger, where they still have high growth rates. So if you bought this over $200 per share, I don't know when we go back up over 200, but I will say that I don't think that it would be too long. I think certainly during 2023, by the end of 2023, we could see those values go back up over that 200. And when you stretch out over longer time horizons, you're only increasing the chance with Tesla in order to have a higher return come back to you, certainly by 2025. Safely doubling the price from where they're at right now, especially as we switch from, uncertainty over economic outlook and uncertainty over bear market versus bull market. As we switch back over from a quantitative tightening cycle to a quantitative easing cycle, and like everything becomes sunshine and rainbows again, that's going to be something that allows Tesla's stock price to experience that levity that it had, not necessarily the same as what we saw following the pandemic immediately, but it should be easier to move up from where it's at right now. Right now, there's lots of fear, uncertainty, and doubt in the world, and also the bear market gives that negative bias to what we have. So the good news doesn't seem as shiny as it should. The bad news seems worse. As we switch to bull market, those things flip, where the good news seems just absolutely incredible and euphoric, and that's when you get those really high prices where you end up having your 50-day start to gap away from your 200-day moving averages when you look at the charts. All right, so here's a quick look at Tesla chart. You can see that we peaked up over the 200, and I said we're probably going to come back down from that. We did. We closed out at almost 197, just a little tiny bit below that. And, is it too late? Did I miss it with the $200? Maybe in the short term, but let's zoom out a little bit. So yeah, we have that resistant number at 200, or maybe that support number at 200, because we can argue that this isn't necessarily a fully broken support. We could watch for that to happen. If the full body of this candle, if we opened below 200 and we dropped well below 200, that would be better evidence that what we are is below that $200 level. I'm going to zoom out further though. There we go. Get this gorgeous chart. Actually, as a matter of fact, let's go weekly instead of just daily, so you can see this take place. There we are. So we are over here right now. And when we go back, the price at the moment is back to 2021 levels, and Tesla has built out significantly from that time. So we are up over the 200-week moving average that we have, and I don't believe that this is the end of the growth story for Tesla. So the $200, I think we're going to continue to watch that line take place where we have this upward movement. Now, mind you, it's not going to be a straight up path, and you can see that it's going to live and die on the news that we have that comes out. And really, that's where fundamental analysis comes in. And rather than the emotional side of oh my gosh, Tesla's the best, or oh my gosh, Tesla's going to fail, those two things, just watching the news come out, and the news is always polarizing. That's how it sells, is that they want to get you emotional, and they want you to either love things or hate things, because middle ground doesn't sell. Middle ground is gray and mush, and it just doesn't do well for it. However, if you're going to look at Tesla and you're going to look at their growth and you're going to believe in their fundamentals, then you have to be gray on this. You got to look at the mush of it and find out, in that boring stuff, is this a company that keeps growing? If the answer is yes to that, then it is possible that we see this price action continue, especially as they experience what I believe to be rampant growth over the next, well, it's 2023, so up by 2030, as the EV market builds itself and Tesla grows with it. I think it's one of the closest things I think that we get to a guarantee for a company over time. I don't see any competition catching up to them anytime soon. And that means for the next several years that Tesla gets to be top dog. So $200, dropping below it now, I don't think it's a very meaningful thing for the short term, unless you're trading over a short time horizon. If you invest rather than trade, where you're looking at longer time horizons and letting the company grow, if you use longer time horizons, then that company has time to grow, and we could see greater returns, and we get to kind of wash out some of that news, that emotional, like, oh my gosh, Tesla's over, or oh my gosh, Tesla's amazing. Now, I believe that Tesla's amazing. I also believe that their stock price is going to fluctuate, and I also believe that we just need to leave this time of bear market bias. Once that's gone, once we get over to a bull market bias, Tesla's price, I think, is going to move incredibly from where it's at right now, because it is still, in my opinion, one of the best growth stories that we currently have in the market. That is the shift that you can experience with market bias. So what you see right now with these more depressed prices through Tesla, we still have a bear market bias on that. We still have significant hurdles to overcome as we switch over to the Fed starting to drop rates, maybe not this year, maybe next year, but still Tesla's going to keep on going through the quantitative tightening cycle back into a quantitative easing cycle, and they're going to continue to grow during that time. And as long as demand holds out for Tesla, we see that share price move incredibly from where it's at now. So for Cathie Wood, for the next 5 years, to say up to about 8x from the $200 mark, I think that she said $1,600, that would be incredible. But we don't need it to be incredible in order to say, hey, in 5 years, this thing's going to 2x or this thing's going to 3x. The market bias alone changing, I think, is going to be enough to 2x us as soon as we get back to that quantitative easing cycle, assuming that Tesla follows its same growth story. So those are the thoughts that I had on that. I wanted to share that with you. I will put it into hard numbers. I'll do some research. I'll do some projecting. I'll release that over at my Patreon in the near future here. So probably within the next week, I'd like to have that out and really start to put some intentional, thoughtful, hard evidence down to my case for Tesla. That way everyone else can see that as well. So check out that link down in the description for the Patreon. Come on over, join my community, see the research that I have, experience my services and products that I have, communicate with me and my community over in the Discord. We'd absolutely love to have you over there. I really appreciate you watching this video. I am going to tell you that later on today, I will be live streaming with Stock Moe. So take a look or to be on the lookout for that to post. That's tonight at 8 p.m. Stock Moe on my channel. I'm so excited to have him over here. He is such a great guy. I'd love to talk fundamentals with him. Tesla is absolutely one of the companies. I'm just excited to pick his brain further about that and share with him what I know and get his feedback on it as well. And also, we're talking crypto tonight. It's been a while since I featured crypto on my channel, but it is the weekend and crypto never sleeps. So be on the lookout for that. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.